Welcome back. Episode 75. Lisa is officially back from vacation.
Yep.
How was Florida?
It was great.
Where were you?
We basically did like nearly the entire Florida East Coast from St. Augustine to Key West with multiple stops along the way. So it was great. You have to get prepared for Minnesota winters, so I got my fair share of humidity and hot. But it's good to be back in more moderate climate, even though I probably regret that sentence in a couple of weeks.
Well, fall's been last couple weeks been
Yeah, it's
beautiful.
magnificent. Yeah, definitely.
It's like the same weather.
Yeah, and you were back being mean to me right out of the gate.
Wow.
Saying I came back wider than I
Wider, huh?
left for Florida and probably needed
not wider.
and
He's
then
talking about her tan or lack thereof.
yeah, and probably needed SPF 75 to not being red like a lobster. Both statements are true, by the way, but still the audacity.
I'm also the one that didn't start this, but we digress there. We also have Kyle with us this week.
Good segue.
And Keith is with us as well. So Lisa, we did talk about EAF last week. Keith gave a recap, we all talked about what we liked, what we didn't like.
Yeah.
I guess we didn't really talk about what we didn't like, but what we liked and loved.
We left the what you didn't like for you.
Yeah.
So go ahead.
No.
Okay, great.
So what are your thoughts on Elite Advisor Forum this year? What were your favorite parts of it?
No, it was great. I mean, it was fabulous. I mean, it's the one time of the year where we get like our top advisors together in one room, and we have really, I mean, not a lot of time because it's packed with stuff, but still time to, deepen relationships and create new ones with new advisors. So this is really great. And I think my favorite day was Friday, because that is like the market day. First of all, it's Belsky Day every year, right? And it's more like market outlook and all of more market stuff rather than, practice management, which is fabulous as well. But that is really like kind of those presentations. And I really liked, it was Gene Munster, Brian Belsky, Liz Ann Saunders, and then you guys
And
finished
Lisa.
us up.
Don't skip over yourself.
I'm waiting for that part.
Yeah.
Anyway, and then
You stole the stage.
no. Anyways, I really liked, I mean, they all know each other. So it was really cool how they kind of weave the others into their presentation and how they played off of each other. So I really think that's cool, and the audience kind of really appreciate that. And they all had kind of market outlooks, and it kind of sounds like they're all talking about the same thing, but that's not the case. They all have their own spin on it. They all have their own presenting style. All three presentations were a different style and a different angle on it. And yeah, obviously my highlight was sharing the stage with Liz Ann Saunders. I mean,
great.
That was an honor to be on stage with her. That was a very special moment for me. But yeah, overall, I think it was great.
Yeah,
good.
It was.
So what did we not like about it? I don't know.
We didn't. We talked about all the good stuff. No, it's just, I think the only takeaway people don't like is just how busy it is. But that's just a function of having that many advisors, that many presenters, that many sponsors
and all of that.
So it just gets a lot of. I mean,
especially that Thursday afternoon, you've got how many? Because they were all 40 minutes, so it's like back to back to back to back, just layering in presentations. But
no, I think it went.
I mean, it's a lot.
Great.
It's a lot of stuff that we pack in there. So probably you need a couple of days to digest all of that information.
Yeah. All right. Well, it is October 1st. We officially have a government shutdown. So my 2 truths and a lie is going to be about government shutdowns. So, A government shutdown can delay the release of key economic data like jobs reports and inflation numbers. B, during a shutdown, members of Congress also stop receiving their paychecks until the government reopens. And C, the longest U.S. government shutdown in history lasted more than a month. I feel like this one's going to be kind of a cakewalk for you guys, but it's hard to come up with.
I know the answer, so how about Lisa?
I think I go last on this because I mean, it's pretty easy for me, and I just rolled.
Oh yeah, how about Kyle? Kyle, why don't you fire it up? See if you
guess. I don't follow this stuff a ton, so I don't know if it'll be a cakewalk, but I know C is definitely true. It's like 35 days during Trump's first time in office, 2018, I think it was. government shutdown can delay the release of economic data. I believe that is also true. So I'm going to go with B is a lie.
Yeah, B's a lie. I mean, obviously the government, they want to get paid. So, and the other two are true. So that's what it is.
Yeah, B is the lie. That was an easy one, Tyler.
It's hard to come up with ones about a
good.
government shutdown. So
it's good to get that information out there for people to hear about it.
I always find it interesting that Congress still gets their paychecks.
That, of all the ones that
of course they would.
Yeah, right. They
to get a deal done, they should not get paid.
Yeah, right. That would make sense. That would be an incentive.
But everybody else,
Well, they get historically they've gotten furloughed, then they got all back pay.
Yeah.
This time can be different. We'll see.
Yeah. All right. So hot button, obviously we're going to talk about government shutdown. So historically, government shutdowns, it causes very little disruption in the market. Like if you look at history, I mean, you might see a 1, 2, max like 4% pullback over the short term, right? And then over the long term, markets are generally positive over the next 12 months. So why do you think that is? Like why does the market not take into consideration a government shutdown when it is a significant employer, it is a significant part of GDP? Those employees aren't going to be spending money at the companies that we're buying in the S&P 500. It's like, why does the market not care about this?
I'll start. I think there's two reasons. It's typically very short. It's, I think on average, those 22 shutdowns since 1976 were like 8 days. So it's 8 days. It's not like it's months and months, right? We're really disruptive. That, and historically, the people that have been furloughed, the government employees, got back pay. So if you were off 8 days, it was almost like you got a mini vacation, right? If you got the longer it goes, then you have more like your monthly bills and discretionary income. But if it's a week, maybe you would even miss a paycheck because it depends on when it was. It was if you're getting paid every 2 weeks. If you're off a middle week, maybe you miss a paycheck and you're all good to go. So I think that's really why you're not missing paychecks. And I think if it went longer, then you run the issue of kind of consumers kind of having to prioritize the bills, taking out they're not getting paid, take it out of savings before they get that back pay, and then maybe some of that discretionary goes away. I think those are the two simple reasons. That's at least my thoughts.
So then, Kai, regardless if you're Republican, Democrat, I don't want to go down that political rabbit hole, but are we in a different political environment currently than what we may have seen for past government shutdowns, to where you may get a longer shutdown? Like you brought up Trump's first term, we saw, I think it was 34 days, something like that. Like, are we just in a different political environment right now where we can't necessarily use history to tell us that the market isn't going to have a reaction to this?
Yeah, it definitely, it feels different. They always say that though, right? So, if history is any precedent, I would say there's a deep animosity and difference between the parties, and that shows up every day in all the media that anyone and everyone consumes. So I think that's glaringly apparent. Looking at what happened in 2018, I think there was a couple of shutdowns during Trump, wasn't there? It was the long one.
It was like a 1 or 2 days or something like that.
Okay,
it was 18, 19, the long one, and then it was earlier. 18 was another
so
one with 1 day.
January of 2 days in January of 18, and then in February of 18, 1 day.
So they must have done a
stopgap, right? And then 34 days during December 21st, 18 through January of 19. Clearly it looked like ball was being played in early 18, but it wasn't in 2019. So I don't know. I feel like it's probably a lot more contentious now than it was then. So it would not surprise me if this was a 3 handle on the double digits, 30 plus days for this. So whether the market responds to that or not, I think I totally agree with Keith. That the other thing that comes into my mind is markets typically don't like uncertainty. So knowing that this is well telegraphed in advance, like they've been talking about this for a long, like I remember hearing about this in July, like, oh, do you think we're going to have blah, blah, blah? And it's like, okay, well, that's a long way away, but it's here now. So I think if it goes 30 some odd days, that is probably more likely than it was before. But again, it's part of the show. It's part of the drama, and whether markets react to it or not. I think it's probably pretty muted, to be honest.
Yeah. So Lisa, you, I believe, wrote a market reflection on government shutdown.
Thank you for the advertisement. So for our listeners, everyone that wants to read a little bit more about it.
Self-promotion. I love it. Good job, Lisa.
Want to see some charts, head to Gradient Investments website, and there's a quick read, I would say, on that specific topic. Thank you for your attention to this matter. So, okay. That was for the advertising.
So what is your thought on the government shutdown? Like, what do you think the outcome is going to be right now? Like, is it going to be 2 days, 1 day, 8 days, or is it going to be this 34, 45?
I mean, given where we are right now, right, that both sides are pretty much like staying where they are and staying put. And to Kyle's point, like the rhetoric is a little bit more aggressive and different, and both sides are more in their camps and do not want to really move and even, negotiate with each other at the moment. It seems like it could be longer. So I don't think it's resolved in 1 or 2 days. But overall, and also Kyle said that, it's like it really feels like here we go again, right? It nearly is like an annual ritual now, it seems. For media, this is great, right? There's a lot of catchy negative headlines to it.
Mm-hmm.
It grabs a lot of attention. People hear it like constantly, like starting like weeks ago before that even comes to mind. So I think there's a lot of, yeah, okay, we do this again. And at the end of the day, we will resolve it no matter how long it takes, right? So, and the last one that was in 2018-19 at 35 days, the longest in history of a shutdown. During the same time frame, the market added around 10%, right? So it's like, I think investors can see through this because at the end of the day, we will get an agreement and all of that. And when you also look at the economy and the government shutdown, it sounds awful. It sounds, and for the people involved, it is because they do not get paid or maybe laid off, right? What we heard now at the end of the day. But to GDP, generally speaking, it does not dent all that much. And the implications that are there, it's not that it's lost, that economic growth. It's more like postponed to later periods, right? Rather than just gone.
Sure.
And I think investors can see through that. So how long it takes, I don't know. Again, like I said, could be a little bit longer. But I think what could be different, because you asked a question, what could be different this time? And you had it in the Two Truths and a Lie. It can delay economic reports, and we have one coming up this Friday, right? The jobs and unemployment report, which is more scrutiny now and more focus now on that, because we have a softening, weakening labor market. Then we have another inflation report coming out in 2 weeks, right? And where we still kind of need to figure out, is it reaccelerating or are we fine there? And then we have a Fed decision later this month, and they base their decisions on these reports where there's more scrutiny and more focus on now. So I can think that this will, if it takes so long that these reports are delayed and the Fed kind of needs to, do a shot in the dark or kind of probably stay put before they do something, that could have implications for the market.
Yeah.
Probably short term as well, but that could, I think, vote for more volatility this time during a shutdown than it was in 2018-19.
To add to that, I saw a headline this morning in Bloomberg that said if the shutdown goes for 30 days and you start getting the employees getting cut, it said estimates for unemployment rate would go up 30 to 40 bips. So
4.7.
4.7, 4.8, somewhere in that range.
So that is a risk right now. We've heard Trump talking about it. And knowing that, what do you guys think if we have a shutdown for 30 days, we don't get the jobs data, we don't get the inflation data, we already know the Fed's concerned about the labor market. And if you start hearing about more and more about cuts from the government, another 40 basis points to unemployment, does the Fed take that shot in the dark and say, we have to continue cutting these interest rates? Keith, because I know you're not necessarily in the camp of more cuts necessarily. So I want to ask you first. Do you think that they would basically forcing them into cutting interest rates again in October?
You can argue both sides of that, but I mean, they could. I mean, the biggest thing I think the Fed, from what I've been reading the last few days, is that the number comes out on Friday, government shutdown. We're not going to get the number on Friday. The number was pretty well almost calculated. I have a sneaky suspicion that they've seen it. So I don't think they'll be as blind as one might think. I think they have some insight on where it is. So I think that'll lead them to their decision on mid-month. And if it is weak, or again, I'm guessing that, I think you're right. I think they'd probably err on the side of, Trump, if he, a couple weeks from now, if he's still talking tough, we're in this, that these people are going to be, they're not just going to be furloughed and brought back, they're going to be done, or a portion of them, then I think they would lean on the side of, we better cut 25 basis points. So I think, it's a good point. So I do think that, the probability has been bouncing around, though. That's why I'm a little hedging myself, because I think it's around 85% for a cut. And that was higher just a couple of weeks ago. So I think people are coming off of that. We have to cut.
Is that based off futures curve? Or
probability? This
poly market?
No, the CME probability.
Oh, CME. Okay.
Yeah. So they do a same type of deal as poly market. So that's come off a little bit. And it's even, I think it's now 10 or 12% that they don't do anything, which, if you remember, if we go back prior to the previous cut, it was 100% a cut, and then there was I think another 10% chance of 50. So now we kind of swung a little bit back the other direction. So that's a great question. I think that is the unknown. I think that's kind of what could make people nervous. Normally during these shutdowns, they're short. This one's going to be longer. And by the way, we're really data dependent on investors and the Fed, not just the Fed, us as investors as well. We're like, okay, as bad as we may think that data is, we still like to see some data. So that's going to Kyle's point, I think that could add some volatility in what Lisa said as well. So I think that is something worth keeping an eye on.
So as we speak,
did it change again today?
Yeah. Poly market has an 89% probability of a cut in October, and the CME Fed Watch tool now has it at 99%.
That was just the other day. It was at 89 or something like
really
that.
Jumped.
So it jumped. I think it is due to what.
I think it's. I'm guessing it's just almost they have to if Trump and his administration is going to be tough on this topic of, we want to try and right size the government to what we think the right size is, and we know that we're going to have some cuts here and there, and then you start talking about 30-40 basis points,
which doesn't sound like a lot, but that's a lot.
That's a big jump. Unless if those people leave the workforce and that flattens out but I can't imagine that many people would be leaving the workforce to keep the unemployment rate down.
They won't. If they're chopping those jobs, they're not going to go through and say, okay, this person's 60, whatever.
Yeah.
Right? They're just going to do.
They're going to say this department, you're reducing by 50% for this department.
Yeah,
it is what it is. So that brings me to the next question of, if you start to see this rise in unemployment, historically, a recession hasn't followed a government shutdown. Right. The closest recession to a government shutdown was COVID. So just after the 34-day government shutdown in 2018/2019, COVID was
a year later,
that 14 months that caused
but there's
the recession.
Right.
No direct link between those two. Does this put us with what we've heard about consumers, right? As, not necessarily the high-end consumers, but the lower income cohort consumers who are already paycheck to paycheck, struggling for the bills. We know the higher income earners are fine. Now you start getting a massive potential layoff of government workforce. Do we start to see recession signs appear more evident if this happens? Kyle?
Yeah, my mind goes to the kind of the definition of recession, right? And it's gotten squirrely over the last few years, and I feel like in the last couple decades, like depending on who's in office. The other thing that comes to mind is the kind of pockets of weakness. So, like in 2014, there was a energy complex recession. So industrials, materials, and energy companies completely, all the PMI, ISM data, all the manufacturing activity data just completely cratered. And all of those stocks just did not work for like 2 years. And if you owned them, you were, you got your face ripped off. Like it was a problem.
Yeah.
So, I do wonder, I think like the parallels between now and the lower end consumer, as you were just articulating, you look at the Dollar Generals, you look at the Targets, you look at some of those, and there's pockets of strength for sure there. But in general, it feels like we've been talking about labor market weakness for months, like quite a while on this podcast. So it doesn't feel strong. And I just saw it yesterday, the I forget where I was reading this, but it's the quits to hires ratio. I don't know if anyone else saw this or not. Like it's really surprising that the chart is just completely like blown up. So like
quits, I mean, a lot more quits than hires, or vice versa.
There's the amount of people quitting has like evaporated.
Yeah.
And the amount of hiring has also evaporated. So we're in this like weird quasi recession for the labor market, where it's just it's like at the bottom of a cycle. If you look at over the last couple decades of that data, it's very much in alignment with a recession, even though the broader economy isn't technically by definition in that. So I don't know. I just feel like we could probably see continued erosion of the fundamentals in those certain pockets, but yeah, I don't know, K-shaped recovery, continue to be a K.
Yeah. Lisa?
I mean, everything was said, right? And I agree with the points that were made. And we probably don't know, and we don't know if we are in a recession already until it gets officially declared. And then, you're already a couple of months in it and probably on the way out again.
Usually on the way out.
Or usually on the way out when at that moment, when we officially know that we
buy small caps.
Yeah. So, I mean, so far, the US, I think, after COVID has evaded recession as the only big economy in the world, as the largest economy in the world, while other economies all basically slipped into one. So, I would also not lose my hope on the US consumer. If Americans love something, what I've learned since I live here, then it's spending money, and that kind of keeps us afloat for years now since COVID. So that's really what's keeping us afloat. And so I would not lose hope there, but certainly there are cracks. That are maybe more now than they were a year ago in the labor market. Inflation still not completely under control. So yeah.
I mean, the technical definition of recession, what, 2 negative quarters of GDP?
Yeah. 2 consecutive.
Yeah, but they punted that out.
I know.
The NBER has a laundry list of things that they watched.
But that was traditional.
That was traditional.
So, I mean, we're forecasting 1.7. I think it's going up. It was at 0.9 not too long ago. We're at 1.7. So I think directionally the economy
final came in at 3.8, right? So like,
and Q1 was negative, but that was a blip with tariffs and inventory stock-ups and stuff. So that was
I think there's parts of the economy that are in that type of recession. I don't think by any means the overall is not even close.
Would you argue that a spike in unemployment would be I know economic data is always lagging, but is it a leading indicator for weakness in future GDP?
I think it's a lagging indicator. So it's
it's more leading. Like if you look at the overall economic data picture,
certainly not helpful if unemployment goes up.
Unemployment on a monthly basis is a lot easier to help you read into the, again, labor market, but how the
directionally
strength of consumers. And so that if we do see this spike in unemployment, does that mean that we have weaker economic growth in the next Q4, Q1, and you start to see the potential for those negative?
A little bit, probably, but not as much as you think. That whole conversation we had a couple weeks ago about how much the top spends versus the bottom spends, and unfortunately, that dents the GDP less impactful, even though more people are impacted. Sure. That makes sense. So no, it's certainly no one wants to see unemployment going up, and especially in, depends on what, income band you're in. So
so I'm going to wrap my next segment into this one just because there's kind of similar questions, but knock-on effects to the stock market. So if we look at seasonality trends, Lisa had this. Was that you that brought seasonality in a couple weeks ago?
3 weeks ago, I think.
October being the most, September being the weakest out of all the months, October being the most volatile. But if you break out like first half January, second half January, and go through all the months, second half of September is always the most weak. But then you get starting October 1st, this is the start of the seasonally strong period, regardless of the volatility. But you have the next 3 months, actually 4 months into January, as the strongest seasonal period for the market. So we saw a very different September than we typically do. Could this mean, with all of the noise going on, with the Fed being more concerned, with unemployment rates going up, government shutdowns, does that mean we may not get this Santa Claus rally into year end? Let's start with Keith.
I think we still rally into year end. Maybe it's more like a Santa Claus elves rally, a little bit smaller, right? That's all. I think we got a lot of pull forward already because September was supposed to be negative. I think we finished up almost 3%. So I think you've pulled some of that forward.
So you've been talking about wanting a pullback or thinking we need one just based on the frothiness and then maybe that rally into year end. So is this could this be the catalyst to get that 5 to 10% correction?
Yeah, I do. I do think, especially this unknown, if it drags on, this Fed, I think we talked about it earlier, but I think the Fed not officially having the data and potentially cutting, not cutting, I think that volatility mid-month is going to increase, especially if the rhetoric on both sides are like farther apart. And it's like, especially if they go down the line of, okay, well, if they're in a furlough, they may not come back, which is a whole different story than getting time off and getting paid for it, right?
Right.
Again, if it's short, you don't miss your bills, but you start going over a month and you have to prioritize your spending, which gets to your question of consumer spending, which that could be the short-term draw, but then all of a sudden they're back to work, economy's still humming along. The other thing we haven't talked about is earnings coming up in the next 2 weeks. I think that ultimately is going to dictate things.
Kyle?
Yeah, I don't really have a lot else to add. I definitely think it'll continue to trudge higher for sure. I mean, valuations are what now, 23 times?
Almost 23, yeah.
I mean, it's crazy. Price for perfection. So I would anticipate October will be volatile, driven by earnings and kind of pulling back the curtain from the Wizard of Oz, right, and seeing what it looks like.
Lisa, contrarian view or same page?
I mean, I think like September was, like to Keith's point, the strongest in 13 years. So was it last year. So I think, again, like to begin with, that is evidence that you should that history is a guide and it rhymes, but it's not happening every year. And it also shows, like what we talked about on a podcast a couple of weeks ago, that you should not make portfolio decisions based on these calendar quirks, but use it more like, a guide or kind of set your expectations rather than making decisions based on that, because you would have missed out 3% this year. And with around 15% up, you need these 3% this year. So we're happy about that. You would have missed out 2% out of 26 last year. So I think that is again a good way to look at it in hindsight. And well, now October, I think, and a reason why it is historically and on average the most volatile is because Great Depression, Great Financial Crisis, Black Monday, and all of that happened in October. So that drags down the averages here. And I don't know, a coincidence, probably everything happened in October. Now we have other topics, like to Kyle's point, we have the start of the earnings season. That part of it falls into October. Then we have government shutdown, probably no economic reports. We have a Fed decision based on if they see data or not, but based on uncertainty. And that could bode well for that increased volatility again this year. But yeah, let's see what happens. Not really the contrarian view you were looking for, huh?
That's all right. All right, last one. We'll roll through this quick. So watch list this week. TV series or show? Keith, what are we watching? Or if you're not watching something good, are you looking forward to a season coming out?
No, I think we just, wife and I, now that we're empty nesters, besides doing my bathroom project, we're watching a little bit more TV. We just finished, I think it was Netflix, Black Rabbit. It's Jason Bateman. If you guys watched Ozarks at all, it's kind of got that same feel. It's a little bit slower burn.
I saw some stuff on it that's supposed to be really good.
Yeah, I really liked it.
What is it, a thriller? Or?
Yeah. It's, if you've seen Ozarks, it's kind of that same kind of vibe to it, kind of East Coast, a little bit mafia thrown in there / trouble adults. It's good. It started slow, and my wife said there's getting bad reviews. I'm like, we really liked it, so that's our show.
I don't have a ton of time, not an empty nester, so the evenings are busy. So Formula One, watched a lot of that, but that's on demand, so show looking forward to probably be House of the Dragon. The next one I think is coming out at some point in the next 12 months.
Okay.
So
Lisa?
I recently finished the second season of Wednesday Addams that came out a couple of weeks ago, and I'm a huge Addams Families fan, and I loved it. Both the first
was
season
as good as the first
second.
one?
I would say the first one is still my favorite, but it's kind of a Tim Burton production. And then,
I watched the first one, was good, and then my wife started the second one. I haven't. Really
I would say the first one is better, but the second one is good as well, and it would fit now. All the seasons and all the episodes are out, and it also fits in October and Halloween later this month. So that is my recommendation. It's on Netflix. So,
all right. Not really watching any. I'm doing some reruns of some old shows. Franklin and Bash right now it's like frat. It's like, have you watched Suits? So it's like a combo of Suits, but like frat boy-esque.
Wow.
So
what's that on?
It's more like comedy, Netflix. But I am looking forward more so to Landman season 2 coming out.
Oh,
when is that
So
happening?
good.
I think it's November.
Is that on Netflix too? Because I've never.
Paramount.
Okay,
so
you might have to get it just for that. It's good, Lisa.
So everything I'm watching right now is more of a placeholder for Landman coming up. So,
and Keith, you got me hooked at Desperate Housewives.
So
I'm
still
yes.
Dirty secrets on
I've
podcast.
never watched it, and Keith is like, you have to watch it, and then I started it, and I cannot finish that now.
Right, it's good, and a lot of episodes. The writing is,
like
you guys
18 seasons. How many
seasons
are
that's
there?
the problem.
It's like 13. It's like my daughter. All of a sudden, she stumbled on. She goes, "Oh, Dad," and I like to watch shows with my kids if I can, right? And so it's like. That was kind of, our dirty little secret watching that show. But it's the writing's fantastic. It really is. A twist and turn. Every episode.
And you are really
like
you are invested after a couple of episodes.
There we go. It's out there.
All right. With that, we'll see you guys next week, and like and subscribe if you like what we're talking about. See you then.